Good morning, everyone. We are starting with the bonds this morning, so I'll be looking at 6 of them here in the Futures in 5 pre-market edition. And today is Friday, January the 25th. We've got a few numbers that normally come out that aren't going to come out today because of the government shutdown. And so what we're watching right now are what the bond guys are doing with relation to next week being the FOMC meeting, and we are still stalled out. This is going to be kind of a big deal. If we move up, chances are rates won't be rising, or at least that's what they think. If we move down, then, they'll keep things as is in terms of their plan to continue to raise rates. Let's go ahead and take a look at the ES breaking out. Remember, I said, hey, listen, this is the number, 2654. We've broken out really nicely up on the edge. If you watch last night's video, you'll see that I drew this wedge saying, hey, listen, the breakout area likely to give us a retest, and that will give us further upshot. That is exactly what happened this morning. We are on the test to resistance. And so that means as we come into the last half hour before the open, we're going to see a fade that likely holds and then pushes forward again. I do not suspect this is a breakout motion in front of the FOMC week, in front of the shutdown. This is just traders very frustrated saying, listen, I am sick and tired of sitting in here. Let's just do something. And so we've got these edges that are potentially forcing a squeeze. They could be forcing a breakout. I don't really see any significant news that is pushing a breakout, but it could very well be. Just watch it. How do you know it's a breakout? It keeps holding higher lows, and you can chase it forward. The second you stop making higher highs, you need to put the brakes on, adding a lot at the higher lows. That's just the way the story goes in terms of using motion and momentum. Right up here, 2677, that's the high that we saw last week sometime. Probably going to stay as the high for a bit. Again, however, if we take a look at the chart and we move into the prior month of motion, which is here, we can see that we really are sitting in a region that is very tightly bound. And if we move upward, well, there's our 2690-ish area. That's going to be that next relative line in the sand for us on the grind to the north. All right, let's take a look at the NQ. Same storyboard, right? Breaking out. It had the same formation, though I did not draw it, but you can see it clearly. There's the same formation, this motion here, breaking out of that wedge action, coming back and testing it, and then moving up into frontline resistance. 6754 is the first relative congestion area, but we can move that into, say, 62, where we see our old area of support and the beginning area of resistance, giving us the first edge up into a space where the chart should fade somewhat. Now, squeezes can go much higher, but based on the formations and the relative momentum, all of the acceleration to the north today will not hold. That's what we're seeing. Now, that could change through the course of the day, but so far, not really going to be the case. All right, so we expect the bounces to fade, pull us into higher lows. If we lose the support zone, which early support 6715, that was the breakout formation. Now the higher morning support regions look like about 6731. Taking a look at the YM, coming right into our old congestion space and prior resistance. What happened here the last time we were here? Sellers. Doesn't mean we won't breach the edge, but the further to the north we go, the more likely it is that we collapse. Do not buy these breakouts. Allow them to pull back into visible areas of support before you participate, or you will be expanding your risk. What is that? 642? Something like that. Could we come all the way back down here? Absolutely. Absolutely. We could. We can do anything. This is flat. That's relatively bullish, but a little divergent. My thought is acceleration to a higher high and then a pullback. Oil caught in a very range-bound pass. Where's the breakout area? Well, it's between 53 75 and 53.95. Somewhere around there. That's the breakout. What's it done every time it got to the breakout levels? It reversed. So, guess what? If it pops up there again and it goes just a little higher, probably going to reverse there too. Okay? Very messy, very sideways action. Pullbacks going to be buy zones because we've resolved out of the tight formations. In general, higher lows are what we are most likely to see in this particular environment. What could we be doing? We could be stalling out right here in this zone above 53.15. I said this yesterday. That's the area where you say, hey, I know if I can pull back there and hold the region, it's going to be bullish. If you saw it in the overnight, which is why I do the overnight video, you can see made a great buy zone. Even though it got a little messy, it's still holding that very, very strong buying area. If it loses it, we fall right back into congestion. 52.50, perhaps. But in general, we are grinding to the north. Lastly, gold. Gold also moving upward. Really interesting because the market is moving upward. Those two don't normally go together, but I would suspect this has something to do with the dollar. So, watching the dollar fade from that particular stance, let me look at another chart here. Oops, sorry. Yes, and we can see the dollar having a big drift lower. That is likely what is affecting our gold action here. What are we going to do? Do you see this congestion? All these moves up are going to be areas to take profit if you are long. This is not a place to hold. We are in general congestion, breakout areas, support areas, right around here. Pullbacks easily could hold buying pressure. We've got flat moving averages and a chart that is trying to recover. Deep pullbacks, still buy zones, but up here on the top are not follow-through continuations, particularly as we get up into the 1291. That's been the Futures in 5 pre-market edition. Good luck trading today.